In this video, we're going to cover the accounts receivable subsidiary ledger and the accounts payable subsidiary ledger. And we're going to create two reports. One is the schedule of AR and one is the schedule of AP. These are really mirror opposites of each other. The AR deals with sales transactions on account, so your customers who owe you money. And then the schedule of AP deals with your suppliers that you owe money to. And so the first thing that we need to do is kind of look at these subsidiary ledgers, and then we need to start posting some things. We recorded all those transactions in the last video using two different inventory systems, the periodic and the perpetual, right? We recorded all those transactions that included accounts receivable and accounts payable, and we made sure that we included the name of the customer and the name of the supplier for each of those journal entries just for this purpose. So what I've got laid out here, on the left, I've got the general journal, and I'm using the transactions from the periodic inventory system that we did. But it doesn't really matter between the last couple of videos that are recorded. They're basically the same when it comes to accounts payable and accounts receivable. So keep that in mind. That's what we're interested in with these journal entries, is this accounts payable and accounts receivable part. Actually, I want to go to the sales. So that's what we're interested in right now. Now, on the right side here, I'm going to start with the accounts receivable ledgers. And so I've got the general ledger, and I've got just the accounts receivable account pulled out of the general ledger. Remember, the general ledger has all of your accounts. You've got your cash, your expenses, your revenues, all your liabilities. I'm just showing you the one just for the sake of this. And then underneath this, I've got the accounts receivable, and this is the subsidiary ledger. And it doesn't say subsidiary, but that's what it is. It is subsidiary to the general ledger. And this accounts receivable ledger has basically a ledger for each of your customers that owe you money. And so Green River Rafts, High Flying Adventures, Marty's Fly Fishing, Mesa River Raft Company, all these businesses that we've been selling to on account, we have a little ledger to keep track of how much money they owe us. And so that is the purpose of this. So the first thing we're going to do is post from the journal to our general ledger, but I'm also going to, at the same time, post to my accounts receivable ledger. So there's kind of a double posting process that happens here. So let me show you. Okay, so the first thing that we've got here is this AR to Mesa River Raft Company. It's a debit of $1933.50. And so up in my general ledger, I'm going to put the date, August 1st. Post reference, we're just going to assume these are all page 1 of the journal. So I'll put J1. And this is a debit, so it's $1933.50. And that's going to mean a balance of debit $1933.50. The account number is 113. And so I would come over here and put 113. And so now what I need to do, I've got my post references in place. Everything's been posted the way you normally would do it, but I also need to get this information onto the accounts receivable subsidiary ledger for Mesa River Raft Company. And so here's Mesa River Raft Company within the AR subledger. And so it's going to look much the same. I'm going to put August 1st, and I'm going to put the post reference J1, and I'm going to put the debit of $1933.50 and the debit balance of $1933.50. So yes, I am double posting. Now, how do I make sure over here on the journal that I know that I've done that? This account number 113 is reflective of, oh, yes, I posted it, so I know. And if I need to go back and look, well, here's the account number I posted it to. How do I know I did that in the subsidiary ledger? Right, I need a way of knowing that. So if somebody else comes behind me and is doing the books, they need to be able to know, like, where did I leave off? So the way you do that, you'd have a check mark. And I don't know how to actually make a check mark in Excel, but you'd have a check mark. How about I'll just do a plus sign, but pretend that plus sign is a check mark. All right, that's what you would do. You'd have another little mark there within your post reference that basically reflects that you have posted it to both places. The 113 represents the general ledger, and then a little check mark would represent the subsidiary ledger. All right, I went online and I copied a check mark, and so I've just pasted a little check mark in there. That's what it would look like. That's the proper way of doing it. All right, so now let's do the rest of these. So that's the first one. Scroll back up top here. And so the next one here is accounts receivable to Green River Company. And so Green River Rafts, it was a debit of $1,116. So here on August 8th in the general ledger, we'll still be on J1 and debit 1116. Debit balance is going to increase. Now the debit balance is $3,049.50, account number 113, and we'll put 11. So I'm going to put a check mark once I get over to Green River Rafts, and we'll copy all of that information here as well. So J1, debit of $1,116, debit balance $1,116, and now that I've done that, I can put my check mark. Moving on to the next one, accounts receivable to Marty's Fly Fishing. So Marty's is down there at the bottom. Let's put it in the general ledger first. So, whoops, this will be on the 14th, J1, 1594. Debit balance will have increased. Now it's 4,643, account number 113. And then Marty's Fly Fishing is down here, and so that will be much the same information. Debit 1594, debit balance 1594, and so I can now put my check mark. Okay, so I've got the double post there. Let's do the next two, and I'm just going to do August. I'm not going to go into September here. I'm just going to do August for this purpose. That way it matches what your textbook shows. The 19th. J1, debit of $552.30, and the debit balance has now increased to $519,580, account number 113, and then High Flying Adventures down here in the subsidiary ledger. That was the 19th, post reference J1, debit of $552.30, debit balance $552.30, and so now I can put my check mark. All right, and then one more for high flying sales for August, and this was on the 25th. J1, debit of $1,674, and so my new debit balance is $6,869.80, account number 113. High Flying Adventures down here. This was the 25th. J1, debit of $1,674, and so High Flying now owes a balance of the previous debit of $552 plus $1,674. Now they're at $2,226, and I can put my check mark. All right, so again, I'm just going to do through August, so that gets me covered. There's my 5 sales transactions that were on account, and so now I have the accounts receivable ledger filled out and the subsidiary ledger for each of these customers. Now from here, I can create the schedule of accounts receivable. Okay, so here's our template for the schedule of accounts receivable report. All right, so what I've got pulled up here is the subsidiary ledger on the left, and then I've just got a little area for the schedule of accounts receivable. And all it really is, it's a list of your customers and how much money they owe you. And you would pull these numbers from that subsidiary ledger. So I've got them listed here. Green River Rafts, they owe us $1,116. And so what I'm going to do is just pop in that dollar amount right here next to their name. High Flying Adventures owes us $2,226.30, so I'll put their amount right next to their name, and we'll continue down the list. Mesa River Raft Company owes us $1,933.50. All right, total that up, and so now I have a total of $6,869.80, and that should and does match the balance from the accounts receivable general ledger. They are both $6,869.80 in both the schedule of AR and the general ledger. And so for that reason, accounts receivable is called a control account. The control being that you should be able to add up the values of all of your individual customers, and they should match what's listed on the balance of the general ledger. Okay, so here we are with the schedule of accounts payable, and the general ledger has everything for accounts payable like you saw with the accounts receivable, except this is our suppliers and how much money we owe to our suppliers. We have a total of $78.94.50. And then the accounts payable subsidiary ledger, we have 3 of our suppliers, and what money we owe to them is listed here. And so for our schedule of accounts payable, we just need to pull in their balances. So $564 for Dana Manufacturing, $2,929 for Langseth and Son, and then Pataponia, $4,401.50. All right, for a total of $7,894.50. And then when I look at the general ledger, I should also have a balance of $7,894.50. And so hopefully you can see that between these two numbers, they match. Again, this is a control account where the schedule of accounts payable will have the detailed breakdown of how you got to that total balance in your general ledger, right? All you're going to see on the balance sheet is that $78.94.50 to accounts payable, but the schedule of accounts payable, that's going to provide the detail that you need, and they should match. If they don't, you've done accounting wrong. All right, so that is going to end it for this video. In the next video, we're going to look at some special journals, a special journal for sales and a special journal for purchases. And special journals are just a way of, they're a replacement for the general journal, and you use special journals only in very specific situations where you have a lot of repetitive journal entries to make, and you can actually save yourself some time and save yourself some headache if you use a special journal when you have a lot of the same type of journal entry over and over and over and over and over. And that's what sales and purchases kind of are. They're the same journal entry. They're consistently always going to follow the same format. So that's a perfect case for using a special journal rather than the general journal. And so that'll be in the next video.